Awesome. Well, good morning, good evening, as the case may be, and welcome to this week's edition of Conversations with Jack. Today we have Zaki Manian here from Sommelier Finance, but before we jump into that, we do have two sponsors today, one of which is Sommelier Finance, the company Zaki and I are working on right now, which you'll learn a lot more about today, all from the history as well as kind of where we're going. So really excited to dig in about that. But I also want to go ahead and thank the OmniFlix media team and Sisla in particular, who helps us produce this podcast. I would encourage you to go check out OmniFlix.network. They have a really cool product around video creators and video curation on a blockchain, and it is built on top of Cosmos SDK. So, all right. Well, Zaki, good morning, and thank you for joining us here.
Good morning.
Awesome. So do you want to give folks a quick intro of yourself? A lot of crossover in this audience, but that is, I guess, the format here.
Yeah, I can always do the short history of Zaki and blockchains. The way I would describe it is 2013, got interested in security, privacy, cryptography, spent a lot of time reading cryptography papers, understanding all the jargon and lingo and everything, learning about distributed systems. Met Jay in early 2014 when he was working on a cryptocurrency exchange, and sort of learned about consensus systems sort of alongside him and Ethan. Was part of a small group of people who were working on scalable public blockchains in 2015 and 2016. Those projects have turned into Cosmos, Dfinity, Ethereum, Tezos, and there used to be a nice little crew of people who used to get together on Saturdays and talk about blockchain protocol design with this vague vision that someday people would have billions of dollars on top of these things, and here we are today.
Yeah, I mean, I remember in 2015, 2016, people were talking about proof of stake, and it just seemed crazy and so far out, and here we are in 2021.
Yeah, and so I've been working on, I continue to work on the protocol design space. Things like MEV have minor extractable value, which were again things in 2015 that are hypothetical, and are now starting to occur at sort of industrial scale, and protocol designers are starting to think seriously about countermeasures. All of that stuff is really interesting to me, but another thing that I'm just really sort of excited about now is that people are actually using these protocols. DeFi has, as we all hoped, brought an entire universe of millions of users to actually directly interact with blockchains. And so that has kind of led me to the work that we're doing at Sommelier Finance, which is about building a system that integrates the Cosmos tech, the DeFi, exploding world of DeFi on Ethereum, into ideally a system that is friendly to millions of people who want to participate.
So I think that's a great entry point to kind of start talking about Sommelier Finance. One note on the MEV thing, there's this great dashboard over on explore.flashbots.net. And if you're interested in learning a little bit more about the stats behind MEV right now on public networks, it's about 4% of transactions, which is pretty wild. But, talking about bringing these financial products to more people, this is kind of what we were talking about when we started Sommelier, and, trying to find a way to make making liquidity positions on Uniswap V2 a lot easier for users, right?
Yeah, so I think that without a doubt, the heart and soul of the DeFi success story has been the success of automated market makers. Automated market maker product market fit has, I think, exceeded anyone's expectations. I remember talking with Jay and Ethan about Bancor like back in 2016, and being like, this is a really good idea, and eventually this is going to work. And the introduction of liquidity mining, the ability to sort of compose AMMs with various different smart contracts, like all of this stuff is kind of has just kind of exploded, and been like a major success story. And so the thing that we like, sort of the vision that we started out with Sommelier Finance is the observation that being a liquidity provider is actually a pretty challenging role in this system. And like when you are a what is a liquidity provider is actually probably the
good place to start. Yeah,
good place to start, right? So you have a constant function market maker. So what distinguishes a constant function market maker from other forms of exchange? Constant function market makers compute prices based on sort of reserves of tokens that are constantly being arbitraged by the users by traders on the system, in a way that like causes their price to converge with like market prices on a regular basis. So essentially, you have an algorithm or like this like sort of system of incentives and on-chain smart contracts that constantly provide price information and allow you to constantly have tokens available to buy and sell. But someone has to provide those tokens to buy and sell. They aren't created out of nothing. And the liquidity provider role is, I'm going to provide tokens into this system in exchange for the fees on the trading activity. And that's what the liquidity provider role. It's you are the source of the tokens that the system of incentives and code can operate.
And I think that, especially at the beginning of this bull market, there's this problem with these constant function market makers as they exist right now. And one of them is that when you're providing liquidity across all prices, when you agree to provide liquidity to one of these things, you're saying, even if Ethereum goes to $0 or $1, I will cover those trades. And that really opens you up to a lot of risk. And I think for, average users trying to understand how to utilize these systems and make money off of them, it's really hard to understand this concept of impermanent loss. And that was kind of where we came in. And one of the initial problems we were trying to solve with Sommelier was impermanent loss protection on Uniswap V2. Do you want to talk a little bit about that kind of core idea that we had come up with?
So let's like work through the list of the sequencing of those ideas. Andrew Miller, who is one of the OGs of the blockchain protocol design space, had this like this tweet that was, the basic statement of being a liquidity provider is, I will earn fees, but I will end up holding the worst performing of these two assets. So whichever asset performs the worst in the market, I will end up holding that in my liquidity position as a liquidity provider. And that is without a doubt a piece of the liquidity provider risk profile. This exposure to the price fluctuations of volatile assets and the tendency of the reserves of the assets that you hold in a liquidity position to essentially be biased towards this. And we were like, okay, well, this is a thing that like makes being a liquidity provider a real challenge for a lot of users, that they have this exposure. So what would it take to build a non-custodial solution to do it? And like one of the sort of visions of Tendermint and Cosmos, going back all the way to 2016, was the ability to build these sort of decentralized alternatives to things that traditionally require custodians. And part of the vision of Sommelier was to actually build a system that could realize this vision for Ethereum DeFi. And so we came up with sort of an initial product of sort of managed liquidity positions that was oriented around stop losses. Where basically you could say, like, if my position is being rebalanced beyond some limit, like I do not want to hold less than 25% ETH or 30% ETH in this liquidity position. If I'm going to hold less than that, I want my liquidity out of it. And so this was the vision of, and so there's all these pieces of software that we have to build in order to make this real. Everything from sort of maturing the gravity DEX, the gravity bridge.
That gravity name collision is going to get more and more fun as time goes along.
The gravity bridge, which is our design for an Ethereum to Cosmos SDK bridge. We needed to build a data pipeline between sort of the chain states of Cosmos and Ethereum. This is where this Ethereum coprocessor vision sort of started to materialize. And so those became the sort of atomic components out of which we started building the Sommelier protocol. And that was the vision of what we were building. And then Uniswap V3 happened.
I think that also important to kind of note as we're talking through this pivot and sort of like why we went this direction. On the protocol side for Uniswap V2, we were actually going to move the tokens that represented these liquidity shares over the bridge and manage them on the Cosmos side. And when we moved over to this V3 architecture, and that was kind of, we all had kind of understood that V3 was in production and that was going to come out at some point. But I think when we all sat down and read the white paper and read through what this new system was looking like, I remember stand up that day, and that was all we could talk about. And I think by the end of the day, we had decided to build on V3 as opposed to V2.
Yeah. So, Uniswap V2, again, has been this incredibly successful product. And the success of the product is like well defined by, is like also sort of like underlined by like how many clones of it. There's Sushi Swap, there's Pancake Swap, there's Quick Swap, Cube Swap. Like, it's almost at this
just an infinite amount of V2 clones. I mean, there's hundreds of billions of dollars of liquidity hosted on top of these Uniswap V2 like things that exist all over the blockchain world.
And so it's almost become like sort of MVP to a blockchain that you have something like Uniswap V2.
Yeah. And, that's why I think that when we saw V3 and the sort of advances that brought for, capital efficiency, especially because when you're trying to provide liquidity, it takes a lot of money. And you have to lock your tokens up for a long period of time. With Uniswap V3, you can actually serve a lot more trades with a lot fewer liquidity and with a lot less liquidity. And I think that that is one of the reasons why we stepped back and said, okay, this is really going to revolutionize this space. How do we approach this as a company?
Yeah, absolutely.
Yeah.
So what about Uniswap V3 revolutionizes the space? And this comes down to what is the fundamental interaction between liquidity providers and the system of incentives. So when we say capital efficiency, so what is the sort of optimal state of an automated market maker? The optimal state of an automated market maker is the optimal state of an automated market maker is where you have enough liquidity at a large enough reserves that you can have the largest possible trades clear through the system at very low slippage. And so the question that Uniswap V3 is sort of asking is, how much better can we do in terms of providing low slippage trades to users? Because that's the product. The product of an automated market maker is the slippage. That should be that is sort of the natural thing to optimize for. If you lower,
this is just to be clear for folks who are not familiar with the concept of slippage. If you show up with $1 million at an exchange and want to exchange it, there's only so much money to service that trade within the pool, and that's going to skew the prices within that pool significantly. And the way that we measure that is something called slippage, and it's just a percentage of price change. And so sorry.
Yes. So it's basically for a given trade size, how much does the price change? And slippage is a thing in all markets. But essentially that is the product of an AMM. It's sort of making this amount of slippage sort of available to the entire world that is on to other programs, smart contracts, bots, everything on a given decentralized exchange. Mechanism is the mechanism is the mechanism of the so that's the mechanism. That's the core mechanism, the core product. You should be able to judge any AMM that's out there for any price pool based on this metric, which is basically how big, though it's a hard metric to sort of find. But essentially what the 1 inches and the matchas of the world are trying to do is to say for your trade, where can you get the lowest slippage?
This is what professional market makers look for in traditional exchanges as well. When you go to the CBOE, and they're looking for deep markets with very low slippage so they can trade a lot of money through that.
Yep, absolutely. And so this is the product. And so Uniswap V3 is all about making a better product. Ultimately, that is what the goal of Uniswap V3 is, to take the amount of capital, is to take a certain amount of capital and turn it into a better product. And what we realized very quickly on, the approach that Uniswap V3 is taking. So Uniswap V3 is taking this approach of making a better product, but it's also definitely virtually everything that has worked about Uniswap V2 product market fit is changed in the Uniswap V3 world. And the core essence of that change is rather than making your liquidity available over all possible prices, you are making your liquidity available over a range of prices. And this really changes everything. The real core to what it changes, it changes everything. In terms of it making a better product, is it allows the liquidity that's provided to provide a lot more a lot larger trades at the current spot price of basically, and that sort of just obviously improves the product. But for the liquidity provider, this is an entirely new world to navigate. And we realize that the technology that we've been building for Sommelier has a lot to offer there.
Yeah, like, 10x less amount of capital that needs to go in and 10x less slippage on the other side. Like, this is a huge improvement, and that's kind of why we decided to transition. But as Zaki mentioned, what we had been building is this very complex system for moving assets across a bridge, managing them over on one side, and taking actions over on another side. Whereas with Uniswap V3, the technicalities of how liquidity provision worked, there's a lot more data that you need to provide. You need to pick your price ranges, which comes with this whole set of other problems. So that required us to really rethink the core product we were offering, and that's what we've been working on substantially for the last month and a half.
Yes, we have sort of rethought the entire utility of Sommelier into what we are trying to build now is could be basically characterized as Uniswap V2 liquidity provider experience for Uniswap V3.
Yeah, and that's one of the technical changes that happened with V3 is that liquidity is now a non-fungible token. When you've got a range of prices and a specific amount of liquidity in there, that's best represented as something non-fungible. And what the product that we're going to be building does is takes a bunch of those non-fungible tokens, groups them into a pool, and then sells shares of that. So a refungible Uniswap V3 liquidity pool.
Yeah. So we've been building a system that has a bunch of sort of core components. So one core component has been, again, completing the gravity bridge mechanism, getting that ready for production. The second piece is an allocation system, basically an environment in which validators can inform the system of essentially predicted and optimal ranges to offer liquidity over price pairs in an efficient and sort of BFT manner, Byzantine fault tolerant manner. And then a third piece has been a smart contract that can sort of manage this idea of sort of refungible tokens.
Yeah, and just to kind of break that down a little bit, what we were talking about with that V2 system is we were moving the tokens over to Cosmos. But one of the big things that we realized when we were architecting the system for V3 is we need to leave a lot more state over on Ethereum and only send these sort of allocation messages, i.e., where does the system think prices are going? Because that's really what you need to do is kind of guess where the market is going to be in order to get the most returns on your liquidity. And that I think has actually enabled a much cleaner architecture and also something that's a lot more extensible. And I think that this allocation piece in particular, there's a lot of really interesting stuff all the way from where the data is coming from, how it's getting managed, essentially, like how the validators are doing regression analysis or, other types of when you take a piece of data and extend it out into the future. But a lot of exciting pieces in that allocation module specifically.
Yep.
And I think that one of the biggest challenges for us in the V2 product and even on the V3 product has been data. Do you want to talk a little bit about sort of like the work that we're doing with the graph in order to get some better subgraph data for both V2 and V3 and quicker indexing times?
Yeah, so absolutely. One of the things that I think has become, really clear as the DeFi space has sort of exploded is the real challenge where we are at the maturity of the blockchain software stack with getting sort of high quality, comprehensible, analyzable data. In databases, we call this the ETL problem, the extract, transform, load problem, right?
Yeah.
And I mean, there's billion-dollar companies that basically have been, that are this about taking sort of operational transactional system of record databases. You know, the observation is just basically like, you know, what a blockchain really is taking, you know, the database architecture that has traditionally existed within one company, with like one sort of authorized series of people who can write and update the database, and sort of blown it out into the world so that you have one database that thousands, tens of thousands, hundreds of thousands of different entities can share as a system of a secure system of record. But it basically then has all the same problems as traditional internal systems of record and companies have, which is like, if you want to make decisions based on like day-to-day transaction flow, you need to have a different representation of the data. And doing that is challenging. And the graph is a really important and product in terms of turning this extract, transform, load system into a sort of crowdsourced data model and deterministic index construction system, so that you can actually have like distributed, fault tolerant indexes of various blockchain data to exist. But it's also very clear that the graph, you know, the graph was a system that was architected sort of before the DeFi era. And the DeFi era has changed a lot of the assumptions in the graph, where the graph is really designed for sort of what I would call sparse smart contracts, i.e. smart contracts that were only sort of invoked on, you know, relatively few blocks, whereas essentially every block of Ethereum is 20-30% Uniswap calls now. And so when you are trying to index these and make decisions based on these sort of core smart contracts, it really stresses the system in a way that the architecture wasn't really designed for. And we are now trying to learn, you know, we are working in this R&D grant that the graph has given us on architectural improvements to the graph system to sort of make it so that these sort of dense smart contracts, where there are state updates essentially every block, can be indexed efficiently.
And this data is just going to go right to those validators to make the best decisions for where to deploy this liquidity on Uniswap V3. Zaki, you said something at the beginning of that I want to circle back to a little bit, that is kind of core to the way that I've thought about the blockchain space for a really long time, which is that we're taking these internal company databases that manage this really mission critical information, and we're blowing it out so that anyone can write to it. And, you know, this is something that I think you and I have talked about a lot, but I think there's a lot of folks in the blockchain space and, you know, who are new to this space who don't really understand that blockchains are really just databases. And what we've added is the ability to have these solid permission structures that are cryptographically verified that allow us to allow anyone to write to them in a way that's not going to corrupt the database. You know, that there was, for a long time, people talked about how if you exposed anything to the open internet, it would be hacked. And then we had Bitcoin, where you know, it was exposed to the open internet for a real long time and nobody hacked it. And that was kind of this fundamental breakthrough in database technology, so much so that we called it something new, a blockchain.
Yeah.
Yeah. Yeah, sorry.
No, absolutely. I mean, that this is what we're doing, right? You know, there is a, you know, Citadel is a company that has internal databases, an internal system of record that tracks what assets that they own and offers prices on equity market trades on a continuous basis across, you know, all, you know, thousands of different assets. Uniswap is a external database that anyone can interact with that does exactly the same thing.
Yep.
Right.
Yep.
And that's the innovation. That's the innovation here. And when we were all starting to work on this stuff, it was very, very clear. That was the core insight. That was the core insight of like, why should we build blockchains? Is we can take this concept of, and the other thing is my observation is that like DeFi is like an inherent property of secure computers. Like if you build a secure database that anyone can write to, DeFi will naturally arise from it.
Yeah. Think about how much money we have tied up in central relational database systems with airline miles alone. Like database entries have value in society and have for a long time. And blockchains are just another way of us acknowledging that.
Yeah.
This topic I love, but we are at the end of our 30 minutes. So let's just go ahead and wrap up with a couple of quick audience questions. Promid Rohit asks, Jack and Zaki, thanks for doing this. Why isn't Uniswap V3 built on the Cosmos Hub? Is it because of the community or the tech? Also, will Sommelier work on the Gravity DEX? I'll take the first part of this, and then I'm going to kick the second part over to Zaki. Uniswap V3 isn't built on the hub because we don't have a smart contracting platform on the hub. That's not what the hub was designed for, and Uniswap V3 fits perfectly on Ethereum. But Zaki, do we plan to work on Cosmos-based decentralized exchanges in Sommelier maybe later this year?
So there are two pieces here. One piece of this is Uniswap V3 is, again, it's a design that is specific to that's like sort of very specific to the sort of constraints and world of Ethereum. There's a bigger idea, which is concentrated liquidity, that has been percolating in the AMM space for quite some time. There's integral finance, and I think in many ways some of the Gravity DEX work. Gravity DEX is not a Uniswap V2 clone. It is not a Uniswap V2 clone. It is not just we brought Uniswap to the Cosmos SDK. The Gravity DEX is a thing that is designed to take advantage of the different strengths and weaknesses of Cosmos and the Tendermint execution model to offer what is a different product. It has this sort of batching property. And I expect and anticipate that concentrated liquidity will also come to the Gravity DEX in a future version of the system. The orientation, the belief of Sommelier is that concentrated liquidity is the future. And this sort of wrapped validator-assisted concentrated liquidity is a key piece of this. And it's something that we plan to bring to everywhere as concentrated liquidity sort of matures.
That's a great answer. And sort of tangentially related to this, Casey also asks, will one be able to pool staked tokens, other non-Cosmos ecosystem tokens? This is very close to the work that you've been doing, Zaki, for a long time on staking derivatives.
Staking derivatives are becoming such a key and important part of the blockchain ecosystem. I see Lido blowing through new all-time highs like every day in terms of how much ETH is deployed in their ETH2 staking derivative system. And you see staking derivatives coming to almost every proof of stake system. One of the things that we are working on inside of the Sommelier project is laying the groundwork for native staking derivatives in Cosmos. And the staking derivative DEX combined thing is just again really interesting.
It's a powerhouse.
Yeah.
Speaking of ATH, happy Cosmos ATH today as well. As Swanson says, we are pumping, sir. So thank you. And Zaki, I do want to just say thank you very much for coming on the podcast today, and a lot of exciting announcements coming up for Sommelier Finance. So be on the lookout for those. We'll have a product you can work on and try next week. So thank you all very much. And we'll see you next week on Conversations with Jack. I believe we have Alessio Triago from the Tendermint team on next week to talk about Cosmos Cash.
Awesome. Thanks,
Awesome.
Jack.
Thank you, Zaki.